Let's get you updated on our grain trade here in this particular segment. And we are joined on set by Chris Swift of Swift Trading Incorporated, based here in Nashville. Good to have you with us here today.
Good to be here.
Momentous day, if nothing else.
A lot of stuff
because
happening.
of the action. It's all kind of lopsided, though, all on one side, right?
All one.
Okay, let's go take a look here at what's going on in our grain trade with up-to-the-minute quotes. And right now on the corn, lots of pressure continuing here. We're down 7 3/4 to 379.5 per bushel, and that is off of its overnight high by a significant amount. Now, we did have an overnight export sale here, Chris. We had 111,000 tons of corn that was actually sold to Japan. That was reported this morning by USDA. It was for next year's delivery, though. I thought that was interesting. It was for 2020 and 2021. Do you read anything into that or not?
Not right offhand.
Not now?
No.
Okay. All right. So we'll let that one just kind of lay there. Okay. 111,000 tons of corn to Japan, and yet the market's selling off. Soybeans are down this morning. Let's look at where we are there. On the March contract, we're down 10 3/4 at 891.25. And the wheat market has come under quite a bit of pressure here this morning. And the Chicago wheat currently down 9 1/4. We're at 564.25. New crop July down 8 3/4 now. And if you look at Kansas City wheat, Kansas City also under pressure. March down 6 1/4 at 479 3/4. July down 6 1/4. In Minneapolis wheat, this would be your spring wheat trade. March down 5 1/4 at 543. July down 5 1/4 as well. So no matter where you look, you really don't see any plus signs today. And I'm reading through pages of narrative, different comments overnight about what may be driving the markets.
Sure.
Every paragraph, coronavirus, coronavirus, coronavirus. Everywhere you look. It doesn't matter. Even iron ore is down because of coronavirus.
Yeah.
I mean, are they overstating this? What's the deal here?
Well, probably, we've had some weakness in the grain markets for months and months, and we've not seen anything really, even through the tariff negotiations and the phase one deal being cut, where China has stepped in and said, yes, now we're going to be aggressive buyers of U.S. grains. We believe that sometime or another between November and probably right now that a lot of farmers had held off pricing their grains because they wanted to see what the USDA came out with the January WASDE report. And now that WASDE report gave them no hope for any kind of higher prices, I think a lot of the farmers are left with having to sell here and generate some cash for their cash crop.
The energy markets are under pressure, too.
Tremendous.
We saw where crude oil was down over $1 overnight this morning and opened up about 80 or 90 cents lower. I believe now it's still roughly around $1 lower as well. Heating oil is down about 4 cents, I saw a little bit ago. Is this presenting an opportunity? Well, there it is, down 5 now. Is this an opportunity for producers?
It is.
If they need to lock in some energy needs.
It is, absolutely. We looked at it a couple of weeks ago at probably 20 cents higher than this and thought it was a really good time to lock it in then. So another 20 cents lower, it's even that much better to be locking in. We did note that this took out 8-month lows in the heating oil. So we're looking at you've not been able to buy your diesel fuel for this cheap in the past 8 months. So
you're not necessarily willing to wait it out, hoping to get a better deal, maybe.
Yeah, I mean, it may come, it may not, but this is a pretty good drop, and most of the people have a pretty consistent need or usage of their energy, so even if you wanted to scale into it, just like we look at trying to market on the way up, we want to try to procure on the way down.
Okay, so now we covered the grains, we covered energy, even iron ore for crying out loud. We want to come back and take a look at our livestock trade here in a moment, too, and see what the implications are there. And we have the man to talk about it right here, Chris Swift, and we'll take a look at the cash markets, coronavirus, all kinds of stuff when we come back. Well, we're back talking with Chris Swift of Swift Trading Incorporated in Nashville. Time to focus on the livestock trade right now, and let's go ahead and go to the board. We'll take a look at live cattle first, and they are under pressure like everything else today. We have February down $1.25. That's right where it was last time we checked. April down $2 now at $122.30, and you have the June down $1.83. All of them at least $1.25 lower. Now let's look at the feeder cattle market, and so far today on the feeders we have January, the only one showing a higher price, but it's the end of January,
That's
so
right.
I mean, take that with a grain of salt. March down $2.80 now at $136.88, and April down $2.90, $139.60, and then you have the lean hog market. Let's slide over there. On the lean hog trade, February down $1.30, while the April is losing $1.88. May down $2 at 77.97, and has apparently been flirting around with limit down trade today. So a lot of pressure here.
Yeah.
We had cash cattle trade, Chris, around 124 out in the plains
Correct.
on Friday. We had the cattle on feed report that came out exactly as expected.
Pretty close to it, yeah.
What does that mean for this week?
You know, we have to deal with a lot of those animals now. That number was just shy of 12 million head on feed. So
Really?
a 2008 equalization too. So we have been eating beef at a very high level. Our consumption levels have been very good, but we still got ample, plenty protein on hand. And if we slip just a little bit in that consumer demand, that's going to start to impact the amount of beef we have on hand.
So what's the situation? We've talked about it at length at times about the poor wheat grazing conditions, right, in the southern plains.
Right.
And I know you talk with folks about that.
Right.
Is it as bad as what we hear?
Well, it must be, because we keep seeing a larger and larger percentage of smaller animals going on feed instead of being out in that wheat pasture where a natural 600-pound animal would probably go to. They're just not there. So we keep noticing that we have a higher and higher increase of lower numbers on feed, lower weight classes going on feed, and those animals would have been perfect for that wheat pasture.
Okay, last week on Wednesday, I believe, we had the cold storage report that came out. And then on Friday, we had the cattle on feed report. And some producers going, well, okay, we made it by those two. But we have another one coming up this week, right?
Yes, it's
a biggie,
It's
right?
the inventory report, cattle inventory
Now,
report.
explain what that is.
Well, it's a total of all the herd that we have. It'll have not only beef, but it'll have the dairy cows, and it'll have the entire herd size on there, which right now we're looking at, I suppose, about 99% of what it was last year. A lot of people have noted the 2018 death loss of the severe winter. The 2019, we had some death loss there. And as well, what we've seen is we've seen a greater number of cow kill and heifer placements. So we've continually started to put our breeding stock, kind of cull a little bit of that breeding stock out there.
And what would you glean from the numbers in that one? What are you going to be looking for?
About 99% of all cattle and calves would be what we're looking for.
But what would it mean if it is?
Probably not much of anything. That expansion is over with. We have probably completed the expansion phase that has lasted really close to 5 years now. We started in 14, and so now in 2020, if it goes to 9, been 5 years that we've seen expansion come to a close.
We'll see if it confirms out.
Yeah, good do it.
Thanks for pointing that out.
Absolutely.
Thanks for coming in.
Sure, glad to. Always.
All right, Chris Swift of Swift Trading Incorporated in Nashville with a look at our livestock trade in this segment.
As always, thank you, gentlemen, very much.
Yeah.